Hi guys, my name is Naomi. I work here at Peach Cards in the finance department, and we are going to be talking interest rates today. So simply put, interest rate is the cost of borrowing money. If a bank lends you, say, $1 million to buy a car, you will repay the 1 million plus a percentage on top of what you borrowed, and that could cost you hundreds because the bank is basically giving you access to funds that you didn't have at that point in time. There are two main types of interest rates that you need to think about: fixed rate or variable rate. A fixed rate is the kind where you pay a constant amount throughout your loan period, but a variable rate depends on the market. So if the rates increase, then you pay higher monthly, and that's not great if your income is not that flexible. A fixed rate, however, allows you to plan and budget for your monthly repayments. But there's something else that you need to consider. Is this a flat rate or a reducing balance? This is what that means. For flat rates, your interest will always be calculated on the initial loan amount. That is the principal that you borrowed. However, for a reducing balance basis, your interest is calculated on the remaining loan amount. And this is where many people get caught, because if your loan is being calculated on your initial amount, then you're actually paying more. But for the reducing balance, you pay less as time goes by. Now let's talk about loan terms. Shorter loan terms, usually 36 months or less, means higher monthly repayments, but lower interest overall. A longer loan term, however, that is usually like 60 to 72 months, means lower monthly repayments, but at the end of the loan period, you would have paid much more in interest. So don't just ask, how long am I going to be repaying this loan? Ask, how much am I going to repay by the end of the loan period? So before you sign anything, ask yourself these 4 questions. 1, what's the annual percentage rate? 2, is it flat rate or reducing balance? 3, are there any early repayment penalties? 4, what is the total cost over the full term of the loan? Because understanding interest rates isn't about math, it's about control. And when you understand interest rates, you stop being sold a deal, you actually choose one. If you are looking to buy a car, Peach Cards has financing options available for you through our financing partner, Easy Gari. Visit peachcards.co.ke na tutakusort.